Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about 3M India. Is it worth investing at these levels or an avoid? So let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about 3M India, here's a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. Now about the company, 3M India was established in 1987 and they provide diversified products in various industries. They have screen protectors, face masks, packaging sheets, home improvement products to office stuff like boards, clips, etc. Scotch Brite is one of its prominent brands here in India and has been a marquee brand for the last 20 years. Scotch Brite, as I say it. The management has a very strong pedigree and have strong market share in their segments of masks as well as kitchen appliances, kitchen products, as I just explained. Market cap of the company is around 25,000 crores, which is very reasonable, and it has corrected from the top. If you look at the financials, these are September quarter numbers. So sales went up by 20% and it came back into profitability of 65 crores versus a loss of 26 crores last time around. It is a debt-free company, very decent ROE of around 20%, margins of around 17% is pretty good. There's high promoter and institutional holding with around 13% free float, which is also a positive. And after the correction, looks extremely attractive. If you look at the performance, then stock had come under focus post the pandemic because of it selling a lot of mask and protective products and you can say kits, etc. Numbers have been decent and return ratios are very robust. Currently, it is trading at very reasonable valuations compared to its historical valuations, and the stock is around 25,000 rupees. Sorry, 22,500 rupees or so. It used to trade at around 32,000 rupees. Stock has remained range bound for few months and may not perform exceptionally as economy opens up because basically it was the pandemic play that really played out, but from a 5 to 8 year perspective can be a decent buy at these levels. So why I believe that this can be bought here and on declines and keep on kept on accumulating. This is like a stock which you can keep in your portfolio from a long term point of view, from a 5, 7, 8 year point of view, not like trading into it. It is a market leader in its space, whatever it does. It's a big consumption play for urban India with the kind of mask and other products that it sells. And it caters to high-end market, which is growing. So high-end market, a market which spends a lot, it is growing in that segment. Very good management. It is an MNC company, so very little chance of any you can say untoward incidents with respect to corporate governance. A leader in different diversified space of products that it makes. It has corrected appreciably from the top, as I explained. It has corrected 25 to 30% from the top. There is high HNI holding, and it is a very stable stock with stable earnings growth, and you can say numbers that keep on coming in. So there would hardly be earnings shock. Although I must say that the kind of numbers that it produced in FY21 might not be replicated, but going forward, if you have a 5 to 7 year point of view or 5 to 7 year investment view, then these are decent levels to buy and keep on accumulating on declines. So if you look at technicals, then there's strong support around the 22,000 levels. It's trading just above that. The major breakout is expected above 27,500. It is a low volume stock with low liquidity, so kindly take that on note, and that's why you need to accumulate slowly into the stock rather than buying completely into it in one go, because you'll get opportunity throughout the next 6-8 months with the kind of markets we are in. You will get opportunity, so every month you can put in some some money and buy into the stock. Can be traded with a stop loss of 22,000, but I won't say that could be one of the best ways to look into the stock with the kind of markets we are in. May remain in a range and can be avoided as a trade. That would be my call. So it can be traded, but the most call would be to avoid it as a trade. Somebody who can trade very well or is nimble footed can get into a trade with a stop loss of 22,000. So in my opinion, buy on major declines and at current levels and keep track of numbers. Have a good 3-4 year time frame. I think the performance should be good. I think you can get 50 to 60% upside over the next 3 years into the stock and have less than 10% exposure into such stocks. So this was a video on the stock. Please like and subscribe and channel, hit the bell icon so you can get my video straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.